Income Tax 2020, Practice Problem 1, Presentation 22, Itemized Deductions, Interest You Pay. Come in, relax with Income Tax 2020. Here we are in our Lacerte tax software. You don't need the Lacerte tax software to follow along, although I do think they have a 30-day free trial, so if you can get access to a promo or demo version of it or any other tax software, it could be a good tool to practice with. We're going to be continuing on here with our comprehensive practice problem 1, and in prior sections we entered the income information, then we entered in the second section the adjustments to income or above the line deductions, and now we're focusing in on the itemized deductions to see whether or not they're going to be clearing the standard deduction to be able to take them. This time I think this is going to do it because we're talking about the interest income, typically the mortgage interest on the home, that being the big item that could be pushing people over. Now if we go then to the Schedule A, that's what we're considering. We entered the medical expenses before, the taxes, and the interest you paid. Now oftentimes when you're thinking about whether someone's going to itemize or not, this is usually the big one that you're going to be taking a look at. So obviously you're going to be thinking, did they itemize last year? If they itemized last year, it's likely they might itemize this year. And then if there's a change that happens, the big change usually is they buy a house and have a mortgage on the house and possibly have the mortgage interest and then the property taxes on the home. So we're going to be considering that now. Now this one will also be the one that gives you the indication with an external form as well. Obviously that the client will tell you with the organizer, and you'll get it from the prior year tax return most likely, that they own the home and they have interest that was paid. But you're also going to get that 1098 form. So if nothing else, you should get that 1098 form. Once you see that, you're going to say, okay, now we have the interest that's going to be impacted as well as most likely property taxes. So whenever you have mortgage interest, you're going to be asking, how about property taxes on the home? Because that's a big one as well. So the mortgage interest might look something like this. It might look a little bit different than this when it comes from the bank because they might not have the full form in the same format, but the numbers and the boxes will basically remain the same. So if you have questions about what a particular box means, you can then go to the instructions that would be provided with the form or go to the IRS website to a form such as this and then scroll down to where the instructions are and you'll get the box by box instruction that would tie into any type of form that is a 1098 mortgage interest statement form. So obviously we got the bank that we're paying to, and then we have the people that are paying here, and then we're going to be taking a look at the mortgage interest. So we're just going to be picking up the mortgage interest at this point in time. Usually it's fairly straightforward, but you could have things like points involved, and when the first initial purchase takes place, you want to take a look possibly at the closing statement and whatnot and make sure that you're picking up any kind of points that could be applicable in the appropriate fashion. We're not going to get into that at this point. We're just going to say it's the $16,000 that's provided to us on the 1098 that we're going to pull over to the Schedule A. So we're going to go then to the Schedule A and mortgage interest we're going to put here and say that was the $16,000 with the 1098, pulling that back over to the Schedule A now. So now we have the $5,093 medical expenses, the $7,369 of the taxes thus far. We have the $16,000 for the mortgage, the $500 for the gifts to charity, and that's going to bring us up to the $28,962, which is greater than the standard. So now if I go back on over to the 1040, you would think it would now be populating here. It is not because of that funny $300 thing that we did with this above the line charitable contribution. So be careful with that one because what we did is we told the thing to take it above the line here. So I'm going to go back on over and say, all right, now what we want to do is we want to make that adjustment. So I'm going to say now we are itemizing. And so that 500, I want to uncheck that because that's forcing me to take the standard. So I'm going to uncheck that and now say take the greater of the two, please. And this is something that if you mess up in some way, the Excel sheet could fix it, like help you to see that you messed up. You could say, oh, you know, the itemized deductions are bigger, and then you can go back in here and fix it if something like that happens. So now it's changed it to the 28,962. So now we have the proper 28,962, and now we're actually taking the itemized deductions. If I uncheck this, we could see that the Schedule A is now emboldened because it's something that we're going to be using in the tax return calculation. So we have the $81,030 for the taxable income, And then we have the adjustments to income at the 15,006. Notice that that no longer includes the 300 that was on 10B here. And that gives us the 65,430 for the adjusted gross income. Now we have the standard deduction or itemized. We're taking the itemized deduction, 28,962, to give us the taxable income, the 36,463. Tax then calculated on page 2 of the 3,826. We had the withholdings of the 8,000 from the W-2s to bring us down to a refund of the 4,174.